In this video, I'm going to be talking about professional indemnity insurance. You may have heard of it, you may be aware of it, but in your final assessment interview, you will be expected to explain what it is. So in this video, I'm going to explain what it is, I'm going to explain why businesses have it, and I'll also explain what the R.I.C.S requires regulated firms to have in respect of professional indemnity insurance. Now, if you haven't already done so, please remember to subscribe to the channel and remember to hit the bell so when we release our new content, you get that notification. So let's get into it. So what is professional indemnity insurance? Well, it's an insurance policy that covers the insured party from alleged claims that are made against them for negligent or inadequate advice or services that they've provided. Now, it covers the costs of defending a claim, but in the event that the claim is successful, it also covers the costs of damages that are awarded to the claimant. So why do companies have professional indemnity insurance? Well, there are some professional bodies, like the R.I.C.S, that require regulated firms to have professional indemnity insurance in place. But ultimately, companies take out professional indemnity insurance to protect themselves financially from defending claims that are made against them, but also for paying out any successful claims. If a company was unable to meet the costs of defending claims and for paying out successful claims, then they may not be able to continue to operate. Now, another benefit of professional indemnity insurance is when you're dealing with a client and that client knows that company has got professional indemnity insurance, they'll take some confidence knowing that the company that they're doing business with is protected financially from defending itself and from paying out any claims that are made against it. But it also gives the company, the insured company, confidence that it can go about doing its business, providing its services, giving advice with confidence, knowing that it is protected financially in the event that they're going to have to defend a claim or to pay out on a claim. So what do the R.I.C.S require regulated firms to have in respect of professional indemnity insurance? Rule 9 of the R.I.C.S Rules of Conduct for Firms states, a firm shall ensure that all previous and current professional work is covered by adequate and appropriate indemnity cover that meets standards approved by the regulatory board. Now, the R.I.C.S requires that companies have PI cover for good reason. The main purposes are to ensure that if a firm faces a claim, it is protected from financial loss that it cannot meet from its own resources, to protect the insured member or firm against the consequences of its liability, to pay damages to third parties for breaches of professional duty it commits through its professional activities, and to ensure that a firm's client does not suffer financial loss which the firm cannot cover. So if you're getting value from this video, please help us out by hitting the like button just to let YouTube know that you're enjoying the content. So the minimum PI requirements from the R.I.C.S are relative to a firm's turnover. So for new firms, it's based on an estimate of the first year's turnover, and for established firms, it's the previous year's turnover. So let's take a look at the minimum levels that are required. This table shows the minimum requirements of professional indemnity insurance that the R.I.C.S requires regulated firms to have. Now, for firms that have a turnover of £100,000 or less, the minimum amount of professional indemnity insurance that's required is £250,000. For firms with a turnover in excess of £100,000 but less than £200,000, the minimum requirement is £500,000, and for firms that have a turnover in excess of £200,000, it's £1 million. Now, it's not just the minimum amount of insurance that the R.I.C.S stipulates. The extent of the insurance also needs to be on an each and every claims basis. It needs to include the minimum R.I.C.S wording or a more comprehensive wording in the policy. It needs to be fully retroactive, which means that when a claim is made, the insurance that is in place at that time covers the insured irrespective of when the negligent act occurred. It also needs to be underwritten by a listed insurer. It needs to cover past and present employees, and it also needs to include run-off cover. So I just want to cover that last point, run-off cover. Now, run-off cover is designed specifically to protect businesses that are no longer trading. So it therefore will relate to any claims that are made for services that were provided prior to the company ceasing its operations. Now, it effectively protects directors and previous employees, and it will protect them from defending claims, and it will also protect them from paying the damages of any claims that are successfully upheld. Now, there may be more requirements that the R.I.C.S. have for regulated firms in respect of professional indemnity insurance that I haven't covered in this video, so be sure to check out the R.I.C.S. website, and I've given you a link to the professional indemnity insurance requirements on the R.I.C.S. website in the description of this video. So I hope you found this video helpful, and if you have, please consider subscribing to the channel. Remember to hit that bell so when we release our new content, you'll get the notification in your feed. Thank you for watching. It's been great to have you. This has been Construct Academy.